All right, everyone. Welcome to the next video. And this is going to put your daily process together, at least the initial one. Um, as far as the process goes for the day, as day traders, we want to have a basic understanding of where the market is going overall. And then for the day, we want to understand where the day is most likely to expand or is it most likely to be a consolidation. So before your day starts, the first thing you're going to do is check the news. So I like to go to Forex Factory. Forex Factory, make sure we're sharing that one here. All we're going to focus on in Forex Factory is the USD red folder news. So the yellow folder, orange folder, we're not really interested in that. It's not going to give us too much of a movement. But the red folder news is going to show us what times volatility is most likely going to come in through the day and for the week. So if we're going through the calendar and we see that Monday doesn't have any USD red folder news, I'm not expecting Monday to make a significant high or low of the week because we don't have the needed volatility to do that. So when you're framing your week, you want to look at Monday, Tuesday, Wednesday, Thursday, and Friday, see which day has the volatility coming in. Tuesday, 9 a.m. We've got this doesn't matter as much as this being red folder, but we know that there's volatility that's going to come in at 9 a.m. on Tuesday. So that could possibly give us a potential manipulation of the week a little bit early. We look at Wednesday, 7:15 and 3. We've got red folder news. So for Wednesday, we can expect 7:15 to give us a manipulation. And then 3 p.m., we can expect some madness, which is exactly what we saw. So leading up to red folder news times, you can sometimes expect consolidations, the market engineering liquidity above and below the market. So these are all times to be careful until the manipulation comes out and then more of a direction is confirmed. Thursday, it's like 7:30. We've got unemployment claims. Expect some volatility there. And then 9 a.m. as well. So these are the times we're expecting manipulation, large movements, different things like that. We need to be aware of those. So if we're in trades, we can prepare accordingly. So here we've got non-farm employment, unemployment, Fed share, all this USD news at 7:30. So Friday you can expect a lot of volatility to come in at that time. So either trade after or if you want to trade that 7:30 a.m. news, just understand that that could cause some of the manipulation. So we need to understand what's happening on the higher time frames to alleviate the stress of the lower time frame volatility here, because this volatility is only going to push the market where it's already supposed to go. So within the order of delivery and different things like that, if we're ready for a retracement, 7:30 news is going to push us and give us that retracement just a lot faster than it normally would. So there's no need to get nervous around these times. It's still going to follow your order of delivery. It's just going to happen a lot faster. We just need to know how to not get caught up in it and how to trade it accordingly. But being aware of that for the day is extremely important. So after that, we're going to check our daily order flow and our key levels. So just like we were doing in the bias video, we want to see the overall trend of the market, what leg we are in distribution and delivery, and then we want to mark some of our key levels. So like here, we're going to look left. We're going to see how the previous day closed. This day closed bearish. We're coming off of key levels. So on the daily, we don't want to mark up 100 key levels and things like that. We just want the main ones. So we've got a gap here. You've got your OGC failure swing. And then below us, before this day starts, we've got this low. So these are all key levels that we want to look at. We can see that we are expanding to the downside, finding our accumulation here. We trade it up. This seems to be our second leg expansion. So when this fails, we could possibly have another accumulation. But we need to see how these days close to then trade accordingly. But before you're starting your day, or before this started, we had these key levels that we're coming from. We've got this low. One thing you can also do is to mark the high low and the equilibrium of the previous day, but that gets a little crowded. So on the 1 hour chart is more important for, inside these days. But this is pretty much all I'm doing on the daily. Just want to know where we're coming from, where the overall herd's going, and then we move down to the 1 hour chart. So now on the 1 hour chart here, before we start this day at 2 a.m., I want to mark the low, see where we're coming from. Again, we closed down really low. If we're closing below the open, so 2 a.m., we want to see if that's being respected or not. It's really important for the delivery of the day because everything is based off of back when we talked about how the algorithm works. There's always a start time, and that's something that the algorithm is always going to reference based on how we trade around it, which is the same way we trade key levels. So before I start the day here at 8 a.m., I want to see how we were trading here. So we were already rejecting this opening price, which gives me more of a bearish bias as well for the day after the daily showed me that we did close bearish. So if I'm looking for any type of trades, we're looking for it to come back up here. But when we're marking the key levels, all we want to do is mark the main ones. So this daily low right here, you can stay or you can move it to the hourly low. So if we're bearish, this is the low that I'm looking at on the 1 hour. So we've got the low, you've got the opening price here, we've got our expansion and our failure swings. These are all things that we want to be aware of above the market that we can possibly sell from. And then we just read our reactions as well. But before this candle prints, this is the information that I have. So this candle closes, 8 a.m. opens here. So we are completing a bearish expansion. So if 8 a.m. trades up, we want to see how we're trading above the market. But the bias is already derived bearish. You can also look in left and see if we're closing below bullish expansions. So this opening price here, closing below is something you don't necessarily need to keep on the chart. But the fact that we closed below it tells me that this expansion is pretty strong, at least to get down below this low. So just marking a few above and below the market that we can possibly trade off of. So what I want to know most of all is the 1 hour supporting the daily bias. If the 1 hour is supporting the daily bias, then we trade in that direction. After that, we can go down to the 5 minute where we have our overnight session. And then since you have the algo ranges, you can always turn on the algo ranges as well to see if there's any key levels in that area. So we've got 1 hour key levels here. This is 8 a.m. So now we're going to look at what's going on in this overnight session that can support where I possibly want to sell from or where I want to buy from. Immediately when you look to the left, you want to see where the engineered liquidity is. So did we take liquidity? Are we engineering any? Are we do we have any inefficiencies inside of the overnight session? From here, we can make a judgment call on what will happen after the market opens. Right away, you can see failure swings in a row. So failure swing, failure swing, failure swing. Whenever they're adding up like that, usually there's a fast move building up, and you'll see that constantly. So we had an accumulation here in the center of ONS. We traded lower below the accumulation. So talking about bias short-term and long-term, the overall direction is down. But since we've got this printing and we want to sell from higher time frame key levels, taking this trade and this buy is permitted because we need to get up there anyway. And then once we get up there, we want to see how we're trading. So these buy stops, we are accumulating because we closed above them. So we're buying these stops. And once we get to our key levels on the higher time frame, and we can also add 5 minute key levels if we want that are inside of this area where these key levels are. So we have a directional gap. We know how and what we want to see play out at the EQ. So when I look left and I'm marking certain key levels, I don't need 1,000 of these key levels on here. I just need ones that are prevalent to where the market's going. So when the market's closing up like this, I want to mark out which ones give me direction. So when you have a directional gap here that we're failing to close above, I want to know what happens when we get there. Each key level and each thing that we mark out has a story basically to tell. This tells me that if we're going up, it may be a fast move. This key level here tells me that we're failing to close above it. So the bearish bias from this area is intact. So when we get up here and we fail to close above and we start closing back inside the range, we can look for something that we know and love to then take the trade to take out that low. Then even though we're bearish, after we close below our low, we can see what's printing and trade accordingly as well. We have a directional gap. Look what happens when we close that in. It's a nice buy to come back inside the range. So now, as the day keeps moving and as we keep going, we can trade accordingly based off of what's happening around the overnight session. So we never have to be lost. We're looking for how we're trading at lows. This is the order submission range. We take the low of the overnight session. We fail to continue expanding below it, and then we trade back inside. So these are nice trades that we can take, not expecting a complete bullish expansion yet, but enough to make us as much money as we need. So again, we've got the equilibrium of the overnight session. So we're failing to close above anything that tells us we're going to be long-term bullish. So selling is permitted, but it starts at the daily. down to the 1 hour. And the more you go through your charts like this, the more you're going to see how powerful it is between the 1 hour and the 5 minute. And then from there, it's all about pattern recognition in your mind. So with the understanding of how these patterns form and what should happen and what shouldn't, you'll be able to trade accordingly. And then the next video will go over entry, stop loss, invalidation points, and then how to manage these type of trades when you're getting in and out of them. So thank you, and we'll see you on the next one.